Hey traders, Jason here from Leavitt Brothers. I welcome to another edition of my State of the Market series. It's time for an update. Lots been going on. On the surface, the market looks good, but beneath the surface, the market has been pretty quickly deteriorating. Breadth has been pretty bad. It's gotten worse pretty quickly. The quality stock picks are just hard to find. For the last couple of weeks at Leavitt Brothers, I've been telling people, yeah, the indexes look good, but I just don't see any good trading ideas beneath the surface. Okay. Gains have been concentrated into a handful of really good stocks that have done incredibly well, but like nothing else looks very attractive at all. This is a state of things. Like a couple weeks ago, everything looked great, especially with seasonality. Everyone's thinking like we're going to rally into the end of the year, but breadth started to decline, and trading ideas just were nowhere to be found. A couple good ones, but everything else is just kind of just completely uninspiring. All right, so let's get to it. I'm gonna go over the indexes first, and then I'm gonna go over some breadth indicators and show you what's going on beneath the surface. All right, so here is the S&P 500. Nothing wrong here. Strong rally off the March 2000 low. Consolidation for a couple months. Rally back up, support from the 21 there, support, pull back here, support from the 21 here, and now we have all-time highs. So there's absolutely nothing wrong with the chart. The market has done incredibly well, especially when you consider that, here was a huge rally, here's a huge rally, and other than just a couple weeks after the virus broke out, the market has really just steadily trended up for several years. Okay, there's nothing wrong with the market if you only look at the S&P 500. Next up, Nasdaq, it looks equally good. Okay, rallied off the low here, consolidate above the 21, rally out of that pattern, consolidate while getting support at the 21, rally up here, come down and test the 21, and now sitting at its all-time high. I mean, this is the definition of an uptrend. Other than a couple weeks after the virus broke out, the market has been very, very steadily moving up for several years. There's nothing wrong with this. The market's in great health per this chart. Next, this is the Russell 2000 small caps via IWM, the ETF. A little different story here. This is a little flat action. Virus breaks out, and then it moves off the low, and it moves up. Here it gets support from the 21, but the upward slope is a lot less. Then it just takes off late last year, early this year, and then it spent most of this year just consolidating in a range, and then it finally broke out 4 weeks ago, and then the last 2 weeks it pulled back, and today it's trying to find some support at the top of the range. So small caps are a different story. You got the Nas and the S&P doing great. Small caps overall have done great, but most of the gains are concentrated into just a small number of weeks, as opposed to the other indexes where the gains have been much more steady. Okay, but overall, this is not bad. Okay, for this to move up, consolidate for several months, and then break out and be sitting up here above the previous range, that's not that bad. Okay, now let's look beneath the surface and see what's going on with the internals. All right, and this is where the problems start to surface. So what we have here is we have the S&P 500, and we have the 10-day moving average of the NYSE AD line. Okay, it's pretty normal that lows in the when the market is acting well, you get just rolling action. AD line expands, then it contracts, then it expands, then it contracts, and that's a characteristic of a pretty strong market. And then lows tend to pick out lows in the market. So you got a low here, which coincides with the low here. You get a low here, which coincides with the low here. This low coincides with this low. This low coincides with here. And then obviously, I'm going to delete these. You got lower low here, higher low here, so positive divergence. So characteristic of a strong market is that the 10-day of the NYSE AD line just kind of rotates up and down. Right now, we have all-time high here, and we have a low print here, which makes absolutely no sense. The market is pressing higher and higher and higher, and yet the 10-day AD line is down here at negative 400. Okay, so even though the market's pushing up, decliners are outnumbering advancers by a very wide margin. Let's go to the next chart. This is the Nasdaq versus the Nasdaq 80 volume line. Okay, so where the 80 line treats all stocks the same. It doesn't matter if you're Apple or you're a small cap. Every stock gets one vote. If you're an NYSE stock in the last chart, with the 80 volume line, that obviously lets the higher volume stocks do more of the talking. Generally speaking, it's the same. Okay, when the market is trending up, you get lots of just rolling action, mostly above zero, with occasional dips below. But now we're in a situation where I should match these up, like that low to that low, that, positive divergence here with like lower low there, higher low there. It's pretty much like clockwork. You can use the indicator to, try and pick out bottoms within an uptrend. But now we have a situation where the Nasdaq is at an all-time high, and yet the AD volume line is below zero. Okay, so even though the market is pressing higher and higher and higher, more volume is going into declining stocks than into advancing stocks, which does not make any sense whatsoever. I mean, it literally means that like you have a smaller number of stocks that are highly influential with regards to the index that are moving up, but then you have a lot more volume beneath the surface that are actually moving, that are going into declining issues. All right, next indicator. So we have SP 500. This is the NYSE new highs, NYSE new lows, and then the high minus lows. All right, so a couple things to point out. When the market is healthy, new highs, you get some high prints. But if you look at this, going back all the way to last summer, you have like no high prints, okay? Almost none. And right now, we have the SP 500 at its all-time high, okay? So over here we have like 3,600. Over here we have 4,700. So it's like a 30% gain over the last 12 months. And yet you have new highs are declining, new lows are ramping up, and you have absolutely no new highs up here in this range, which that was pretty common back here. So there's definitely, in order for the market to move up, you have the bigger, more influential stocks moving up. Okay, that's why the index is moving up, but beneath the surface, you have a lack of participation. The strength is not broad-based. Same situation exists at the Nasdaq. You have NAS over here at 11,000. You have NAS over here at 16,000. So obviously it's done really well over the last year. Yet, as of Friday's close, last week on Thursday, you had 400 new lows, and on Friday, you had 322 new lows. And yet, on those same 2 days, you had like 160 new highs. So even though the index, the Nasdaq has done this over the last 12 months, you have 52-week lows are outnumbering 52-week highs. Okay, so that tells you how we have Apple and Google and Nvidia, they're doing really well, but beneath the surface, there's not that many other stocks doing that great. You got a lot of high prints with new highs here, but there's very few high prints right there. Okay, so breadth, not very good. Now we have stocks above moving averages. So it's the S&P 500 up top. In the middle here, you have S&P stocks above their 20, and here you have S&P stocks above their 50. So couple things to point out. S&P obviously moving up, printing new highs. Number of stocks above their 20-day moving average has been negatively diverging from the index, and as of Friday's close, we have a print below 50%. Okay, so even though the index closed the week right up near its all-time high, and obviously the trend right over here over the last 6-7 weeks has been up, less than 50% of stocks are below their 20-day moving average. As far as the 50 goes, the print here is not horrendous, but if you were to go, considering what has taken place over here, considering we're at all-time highs, you'd expect a higher print over here. Only like 58% of stocks are above their highs. And if you back it up a little bit, when the market's healthy, you tend to get, prints up here. And then if I draw this over here, you can see Lots of prints over on the left side of the chart here, but almost no prints on the right side here. Okay, so there's definitely less stocks participating. Less stocks have participated in the rally, even going back, to over the summer. Now we have the NDX. Up top here is the Nasdaq. So in the middle here we have Nasdaq 100 stocks above their 200, and below that we have the Nasdaq stocks above their 200. So it's pretty normal when the market does well or flat that the number of Nasdaq stocks above their 200 is not that great because there's a lot of low quality stocks at the Nasdaq. But you don't want it to be that bad. I mean, we're like literally one bad day, and today's a bad day. So I don't know what this is going to print today, but we're literally one bad day away from, an 18-month low. Okay, so that's not very good. You don't need participation at the Nasdaq to be great, but it can't be so bad that we're hitting 18-month lows. Then with regards to Nasdaq 100 stocks above their 200, these are the biggest, highest quality stocks. When the market is acting well, you get lots of prints up here between 70 and 90%. Last in September, it broke down, right here. I should draw that again. So it broke down over here. It recovered a little bit, but it only recovered to the bottom of the range right here. Okay, so even though the Nasdaq is up here at its all-time high, the number of Nas 100 stocks that are above their 200 just simply went up and started to roll over. It couldn't even get up into this range here. So this told us there was a lack of participation among all the Nas, and then this tells us there's a lack of participation, or at least declining participation among the top stocks. Okay, same situation here. This is Nasdaq up above. This is Nasdaq 100 stocks above their 50-day moving average, and Nasdaq stocks above their 50-day moving average. Okay, situation is similar. It's pretty normal that you're not going to get a high print from the Nas, but it shouldn't be too low. So the market was doing well over here, and you get a high print here. That gets momentum going. Market doing well here. You get high prints over here. That gets momentum going, and allows the market to carry forward. And then you get we got strength here. And all along here, but the number of stocks, but there are no prints up here. Okay, and as of right now, even though the Nasdaq is up here at its all-time high, you have only about 40% of stocks trading above their 50-day moving average. Okay, and with the Nasdaq 100, okay, print isn't horrible, but let me delete those. Print isn't horrible, but if this is all-time high, you'd expect, higher prints. If we look left on the chart, we have a lot of high prints up here. And then if I draw that same kind of box here, you can see that we've been progressively getting worse and worse over the last, 6-8 months or so. So breadth, not very good. All right, so overall, indexes are in pretty good shape. S&P, Nasdaq trending up, bottom left to top right. Everything looks great there. Small caps broke out of a range, now pulling back, testing the top of the range. But beneath the surface, something's wrong. Like stocks above moving averages, advanced decline line, advanced decline volume line, new highs. Like their breadth is just terrible right now. Considering several indexes are near their highs, the participation is really bad. This could last for a little longer. Okay, Apple's doing great, Nvidia's doing great, Microsoft's doing great. There's a handful of really, really good stocks that are acting really well, but beneath the surface, participation is rapidly getting pretty bad. Okay, so be careful out there. These gains are not supported. At best, I'd say 50% chance the market goes up from here. We don't have a strong foundation to build on. That's what I see with the market, and I also see it with individual charts. Like if I look at 500 or 1,000 charts, there just aren't that many that really jump off the screen at me and say trade me. So be careful out there. All right, we'll see you next time.